Great. So, as we all know, accounts payable has traditionally been, quite the manual process. In fact, 86% of SMEs still manually enter invoices, and manual data entry runs the risk of multiple errors. Research shows that 88% of spreadsheets contain inaccuracies. Often these can be traced back to mistakes just, simply made by overworked and overstressed employees. And of course, having laborious paperwork and manual data entry does not help. It's no surprise that 71% of organizations identify manual data entry and inefficient processes as their top pain point. Errors, wasted time, and unwanted delays can easily lead to late fees, fines, and even supply chain disruption.
We saw in the previous example how frequent errors can lead to significant consequences for businesses, both large and small. But manual AP is also time-consuming, low-value work. Depending on the size of your business, you may be processing anywhere from 100 to thousands of invoices per month. No one enjoys keying in invoice data, least of all in those invoice volumes. Worse, many AP accountants find themselves entering data twice or more than twice when switching between spreadsheets, accounting ERP systems, and any other software they may have.
So it says 1 in 10 accountants work 7 days a week. 34% consider quitting once per week or more, and 47% take work home every single week.
Let's say you hire one AP clerk to process invoices full-time at $20 per hour. That's approximately $3,440 per month. At that rate, processing 300 to 400 invoices monthly would cost your business about $9 to $12 per invoice. However, these numbers only give you a rough idea of the baseline cost. To get a better sense of the true cost per invoice, you'll want to apply the following equation. The total cost of processing an invoice divided by the total number of invoices processed over a given period. To get this figure, you'll want to determine the labor cost spent processing each invoice, the associated infrastructure cost for tools like ERP, the cost of supplies like paper and ink, any transaction fees you may receive from the bank. Once you've added those costs together, divide them by the number of invoices over a given period to figure out the average amount spent. This number doesn't account for the potential costs associated with errors on an invoice or potential fraud. So it's obvious that the expenses associated with manual processes, invoice can quickly balloon.
So, issuing manual payments also contributes to overall cost. So many businesses rely on paper-based payments, with 81% of businesses still issuing manual checks. The Bank of America estimates that a check can cost anywhere from $4 to $20, considering postage and check prices. So looking at the traditional AP process, once invoices are processed, you have to separate your payments by payment type. So while there are many various payment types to choose from, we just saw that the majority of businesses still issue check payments. So following that top branch in the first workflow, your team will need to print the checks, sign them, and then mail them in addition to all the other invoice and payment processing they're doing. If you add to our $4 to $20 check cost, the cost of other materials, bank fees, and the time your team spends writing, mailing, and reconciling the checks, you're looking at a couple $1,000s a month. And reconciling payments in any circumstance is hard, but having to do that for written checks is even harder.
Not to scaremonger, but your manual AP processes may also be exposing you to fraud. Studies have found that the average company loses 5% of its revenue each year to fraud, and such instances can be notoriously difficult to detect. Providence Water Supply suffered an employee expense fraud that went on for an unbelievable 21 years. A purchasing supervisor at the company used her credit card to purchase personal items to the tune of $13,000 and was only exposed once an internal audit discovered the fraudulent transaction.
internal fraud is only one security issue that organizations face. Manual AP also leaves companies exposed to external threats as well. So the city of Baltimore's accounting department was actually tricked into wiring money to a phony vendor. The accounting clerk at the office received an email to route payments from an existing vendor to a new account. The clerk made the changes without first confirming the legitimacy of the email. And almost $62,337 was transferred to the scammer before the real vendor submitted a complaint about the payment delay. It took about a year to unravel the whole scheme and identify the culprit. Even the most experienced teams can fail to identify the signs of a scam. So how do we make sure this is something that does not happen at your organization?
Beyond the threat of outright fraud, manual AP can also lead to expense management errors and even expense abuse. Manual expense management processes mean it's easy for employees to lose or forget receipts. Out of policy expenses are harder to catch as the volume of expense reports goes up. The ability to catch these mistakes declines and the chance of fraud increases. Employees can also fail to submit reports on time, leading to delays and inaccurate forecasts.
So another fundamental problem with manual methods of accounts payable is a lack of connectivity between decentralized team members. So during the height of the pandemic, teams were actually forced to move to remote or hybrid schedules. And even though many offices have returned to normalcy, it's still very difficult. It's still a very difficult kind of normal. According to Gallup, 53% of workers now expect to have a hybrid arrangement going forward, and 24% expect to be fully remote.
So, what does it mean for AP teams? Well, for distributed teams, manual processing go from being merely inefficient and inexpensive to completely unworkable. Workers need to be able to access relevant financial documents from anywhere. Managers need to be able to receive and sign off on invoices, whether working from home or in the office. You can see how this becomes a problem for teams using paper invoices or depending on physical document filing. At best, it adds numerous additional steps, such as locating, scanning, and emailing documents to the relevant parties. At worst, accurately and effectively manage accounts payable becomes impossible. So, given that the challenges associated with manual AP can impact an organization's financial future, it's more than worth asking what can be done. Well, if there's a way to reduce your AP costs, increase efficiency across your team, and help protect your organization from fraud, a robust AP automation solution will automate your entire AP process in one system. It incorporates all the data entry benefits of OCR technology to upload your invoices, combined with document management so that you can receive, store, and route and process documents electronically. It allows automated purchase order matching and routes invoices to the correct approver. And once approved, you can even pay your vendors electronically. And lastly, you can securely manage your employee expenses all through the same system.
So let's get to the crux of the argument. So AP automation helps you reduce costs by replacing inefficient processes. According to market research firm Level, the average cost to process a single invoice can be up to $15. By contrast, organizations that have adopted an AP automation solution have realized an 83% reduction in data entry time, cutting the average cost to process an invoice to just $3 to $5, and then saving $12 for every invoice you process quickly adds up. So integrating payment solutions can also help generate large cost savings. You get full visibility into your payments and automated reports, and as well as analytics detailing your spend. You can also scale up without needing additional headcount, which also reduces errors and gives you time back to focus on higher value tasks. And then embracing electronic payments can not only help your team process payments faster, but also opens up opportunities to earn rebates and cashback offers, which can be put back into your department. So having a payment module integrated with a dedicated payment solution like Corpay can help with the following. So easily executing all payments in a single workflow, make virtual card, check, and ACH in a single payment run, reducing AP costs and time needed to reconcile your payments with automated reports managing payments. Having a large database of vendors can help you spend less time managing payments as well. And then maintaining control and mitigating payment risk and liability. Customizable approval workflows allow you to control what gets paid and when. And then looking for a payment solution that assumes responsibility for payment fraud risk for qualified payments.
Now, imagine you can no longer have to worry about the risk of fraud, waste, and abuse. We spoke to Hearn Industrial about how AP automation helped them combat financial fraud. Their financial accountant, Derek, says, we received an invoice that was completely fraudulent, but it looked like an invoice that we normally receive. It was uploaded to Quadient AP and routed to the approver. They instantly rejected it as fraudulent invoice. AP automation allows you to implement a number of safeguards to protect against fraud. The software allows you to set up an approval matrix, setting parameters that can require multiple managers to approve invoices above a certain amount. You can also separate duties so that person who approves an invoice is not the same person who distributes the funds. When searching for AP automation software, look for a solution that ties all functions into one central platform. Purchase orders, invoices, payments, and expenses. That's how we do it here at Quadient AP. All AP processes and data are stored in a single system. That means no loose spreadsheets and random software shared by individual departments.